And we are live. Welcome back to the channel. Let's dive into the bear case here, right? We have a lot of negativity going into the end of the year, but there's also a lot of positive aspects here. Okay, so earnings boom. That's the question. I want you to consider the scenario. Obviously, okay, there's a war, right? There's a war going on. Rates are elevated, right? The consumers are set. Consumer savings are set to run out. I know the bear case. We've seen the bear case, right? You're scared to invest. You're not sure where you should get in. Should you get in? Should you wait till, the world falls apart? What are you going to do here? Right? Let me give you a scenario going into this fourth quarter. The Santa Claus rally is what we've been calling it, what I've been calling the Santa Claus rally. And I think it's going to be important for you to consider this, right? Consider this going into the end of the year. So let's dive into it first, right? Let's not waste any time. Although I just did waste your time giving a rant. Anyways, let's go here. So, yeah, welcome to the show, Santa Claus Rally. Let's go. Right. So I want you to consider seasonality first and foremost. Consider the seasonality. Okay. And what is seasonality? Well, usually stocks historically do the best in the fourth quarter. They usually do the best in the fourth quarter. And we've been seeing seasonality. It's been taken over. It's been implementing itself, which is, hey, market psychology, right? And so that's kind of what this shows us here. Here's the S&P 500, right? First quarter, second quarter, we had a huge run up in the second quarter. And that was probably because of earnings. You always have the worst, right? October, September, always the worst months, as shown on the seasonality chart. And we've been trending lower, but now we're in October. Right now we're in October. October is the bear market killer. Are we going to see the bear market killer in over here in October? Are we going to see that? Well, let's dive into it. So first, everything is being ran by the seasonal economy. Okay, this is a seasonal economy. Seasonality. I'm going to keep saying it. Santa Claus rally. Seasonality. Let's dispel all the weakness, or just consider this. Right. First off, excess savings were set to run out in 2023, and that was revised up $1 trillion. What does that mean? That consumers can keep spending. Seasonal spending set to continue. What does that also mean? And here's the actual chart. Consumer savings, right, were set to draw lower, much lower. They were supposed to run out, but $1 trillion up. So this is your chart. Oh, can I believe it? I don't know. Go look it up for yourself. Go find the research. Number two, seasonal jobs. Yes, we don't have full-time jobs that are coming into the employment right now. There's not a whole lot of full-time jobs, right? So when we did get that earnings revision higher, let's zoom in here. That was not very good zoom. Non-farm payrolls up, doubled from expectations. Well, not really doubled, but they went up, right? And this is because seasonality, right? Seasonality. That's what we're seeing. Seasonal jobs. And this is what UPS hiring to help people deliver. The UPS drivers are going to be driving till midnight. Probably not, maybe in some areas. And a lot of the malls, right? Seasonal hiring for, all the spending set to take place for the holiday season. So what does that do? That gives a bid to the market that earnings are set to be strong in the fourth quarter. So that's what we're looking at there. Now fundamentals, right? What are the fundamentals going into Q3 earnings season, really going into Q4, but looking back at Q3, well, earnings are set to increase. Okay, we've been negative. You can see here in Q1 of 2022, negative, big drop in Q3. And this is when the market really dipped. Okay, so can I see it on this chart? No, you can't see it. But that's when we had the big dip, right? When NASDAQ sold off, what, 30%, 35%. And then we bottomed out, and then now earnings are starting to turn back up, and now we're positive. Earnings are turning positive. That's the estimation, led by consumer discretionary. What is that? That's people choosing big ticket items for for the holiday season. Industrials from fiscal policy, not real estate. I'm sorry, technology, materials, right? Building materials, because there's still a lot of apartments being built here. So there is a positive aspect going into the fourth quarter shown by stocks and earnings growth here. What are we looking at? Here's your earnings calendar. If you want to actually see this, well, you can look it up, but I have it on the newsletter. If you did receive the newsletter, we got big earnings from Tesla, right? This is Tesla this week. Tesla, Netflix, ASML, that's over there. Morgan Stanley. We did have the big banks report earlier, and they beat top line, they beat bottom line, and their guidance was higher. So we are already seeing the beginning of a better earnings picture from the banks, and those were set to actually, fall apart. So that just didn't happen. Cyclenomics, right? This is why I'm bullish. This is why I think this is going to catch a lot of investors off guard here. Cyclenomics, right? The economic cycle looks a lot like the early 90s. It looks a lot like the early 90s. What happened in the early 90s? And this is sort of this is the chart here we're looking at, right? Here we are, we're here. These are new orders, and this is production, as in productivity, producing more than you spend, or producing GDP, right? Production, creating goods and services. Well, it looks like we bottomed out. We're starting to turn back up, and I say it looks like a lot like the 1995, or the early 90s, the mid 90s, where you had a productivity boom. It was a new type of economy. The economy was transitioning, and they look very similar. And I'm comparing those because we have new technologies coming into play, right? So 1995, what do we see? Although the chart looks the same here, what do we see in 1995 to 97? We saw the commercialization, right? This was after the savings and loan crisis. Also, we had the savings and loan crisis. We just had the pandemic crisis, and then we had the dump the stock market crisis in 2022. Well, actually, it was the Fed recession, right? The Fed hiking rates at the fastest pace in history. And so, you can correlate it to some degree, but productivity fell. And same thing here, productivity fell, right? New orders fell, demand fell. Now it's starting to pick back up. Okay, now it is starting to boom. It's not booming yet, but it's going to get there. I think so, right? So what happened in the 1970s? Why do I think this is a good correlation? 1970s, 1995, the mid 90s, right? Why do I have that correlation? We had the commercialization of the internet. Amazon, eBay, Windows 95, right? Internet Explorer. And these all paved the way to the digital economy. This is what paved the way to the digital economy. The S&P pumped over 50%. Okay, let's draw down here. Boom, 50%. So 1995, here's the matchup, right? This is the matchup you want to keep in mind here. When that productivity turned back up after the recession, after, a lot of turmoil, the S&P was consolidating sort of like today, and then it just went straight up. I'm not saying it goes straight up 50%, but it is setting the picture. It is setting the frame for for an increase in the economic activity, an increase that other people are not seeing here. They're expecting a big recession. So just consider this view, right? Big pump by S&P when that happened. Now today, what does the picture look like today? Today, housing, commercial real estate, retailers, all in a recession. Regional banks are probably in recession. I think they're all in recession here. This is kind of what we're looking at here. However, under the hood, productivity is beginning to rise, and we just saw that, right? We just saw that here. Productivity is rising. So are new orders, which are the leading indicators for the economy. New orders looking forward, right? These are suppliers. These are supply chain managers, like, okay, this is what we're going to need going forward, because we're looking at the holiday season, because everybody wants to buy presents for their cousins, their uncles, their moms, their dads, their children, right? Put it on credit, keep spending, seasonality, whatever it is. So, it's not going to change human psychology there. And so this is why I think, we're going to see a rise here, right? So under the hood, productivity is starting to pick up. The economy is transitioning from a rolling recession where manufacturing was down into a rolling expansion. I think that's what we're seeing here. Just like 1995, the commercialization of the internet, now we're seeing the commercialization of what? AI, blockchain, electric vehicles, energy storage. AI is the big one. Microsoft, Amazon, Google, Facebook, Tesla, they're all using AI. Palantir, they're all using, not, I don't want to say using AI, but they're all developing, whether it's a large language model, or you have NVIDIA, which are the picks and shovels for AI. That's the big theme that people understand, but blockchain is coming. JP Morgan just said, hey, we're tokenizing all our assets, biggest bank in the world, right? BlackRock, we're tokenizing all our assets, biggest asset manager in the world. So blockchain is coming. That narrative hasn't hit yet. And I think that's the biggest driver for crypto, other than the ETF that was supposed to get passed yesterday, and it did not get passed, right? Here's also another factor to the global manufacturing cycle picking up. The Chinese credit impulse that leads the global economy. The Chinese credit impulse, which is basically the amount of credit or stimulus that they increase into the economy versus their GDP. So what is it? What does it do? It leads GDP. So GDP should be rising in China. And we see the manufacturing cycle in the world. This is the world manufacturing cycle starting to pick up, right? So, hey, this is, what is this? Okay, yeah, let's actually get this one. So, looking into liquidity is weak. So what do we have right now? Okay, we're heading into Christmas, Santa Claus rally is what I think, seasonality, the stock market's usually up. China is stimulating, they're actually going to prop up their stock market. That should be more reason to go higher. We are in a rolling recession to some degree in real estate. And then, we want to look at liquidity. We know the fundamentals are set to go up too with earnings, but what is the liquidity picture? Liquidity is very important, and it does look weak. It does look weak. These are the liquidity conditions right here. The Fed balance sheet, coming off. They're not buying treasuries. They're dumping them. They're dumping debt. They're dumping mortgage-backed securities. But if something breaks, the Fed balance sheet goes higher. Global liquidity has been draining, but I think it's set to bottom out. Fed net liquidity. So this is the Fed's liquidity. Watch this indicator. It's been rising over the past 6 to 12 months. Shadow QE still rising over the past 6 to 12 months, and the S&P is sort of right on target with the Fed net liquidity and shadow QE, and that's still rising there. So liquidity is weak, but if it does bottom out here, then markets are going to go higher. What are the macro forces look at? This is the second part. What are the macro forces that we're looking at here? My main macro forces are bond yields, right? The rate of the cost of capital for the market, the dollar, daddy dollar, right? The cost of trade in the world, that's been moving up. Oil, the cost of energy, that's been moving up. So these macro forces are still tight. Liquidity kind of sucks. Macro forces are tight. That's not a great setup for a boom, right? So why am I still bullish here? Because the market's going to look past this if it anticipates the top in the dollar, the top in yields, and we'll find that out over the next couple of weeks because it is earnings season, and earnings season, earnings can turn this boat around, which is if your actual EPS is coming out stronger than expected, then valuations start to improve. And if you're getting a topping in yields because of the war, because inflation, which we're going to get to next, because I know that's the next concern, if we're getting a topping in yields, then man, stocks can really have a violent rally to the upside. Nobody expects it. This is what happens when nobody expects it. Big, violent move to the upside. So let's look at inflation. Let's look at inflation here. Oh, let's see if I had it. Did I have? Nope. Okay, cool. So inflation, what are we looking at here? Inflation is tame. Inflation continues to ease, right? This is headline and core. We went over this the past couple of days. Core is still falling. That's what the Fed's focused on. Headline is flat over the past couple months. Does that look like a boom in inflate? Does this look at inflation? I know you guys are hearing oil prices are spiking, gasoline prices are spiking. It's going 120. Where's the evidence? Where is the evidence? Oil is not spiking. We just saw that chart. Oil had a tremendous drop from 95 to 82, big drop, and it is bouncing. Maybe it does go to 100, but it's not spiking. What are you going to guess the future? What based off what? A black swan event? Okay, good luck. Maybe there is a black swan event. But today, oil is, it is pretty tame. It is pretty tame. Plus, the Saudi prince came out. What did he say? We're going to make sure the oil market, that's my big telltale there. The geopolitical risks, right? Geopolitics, macro is running the market. And if the Saudi prince, hopefully, we'll get to the risks here. He's saying, hey, we're gonna keep the oil market, the energy market tame. We'll do it, right? If the US gives us what we want, which is probably going to happen, right? Okay, super core. Let's go ahead and take out services and housing because everybody thinks that inflation is so systemic. Well, let's take out the no, I'm sorry. Let's take out housing and just look at services. It's at 2.7%. 2 and 3 quarters. That's inflation going up. Dude, you guys are getting fooled here. Or you're biased. You want oil to go higher. You're long oil, but just look at the data. Look at the data, right? This is the data I'm giving you. This is the data that's in the market. Headline is sideways. Oil spiked and came back down. Services X housing is at 2 and 3 quarters. It's dropping like a rock. Okay, let's look at shelter, right? Shelter is the only reason inflation didn't fall much faster. And this is literally because of lodging away from home, going to hotels, staying at, resorts, whatever it is, right? Motel 6, you guys going to Motel 6? I don't know what it is. I mean, I don't know I don't know where everybody's doing in the US, but shelter, lodging away from home was the big jump. Take that away. And it went from negative 43% to plus 50%. That was a big jump, right? You remove that. Inflation, I would say, core is at 3.9. I'd say core is in the threes if you take that off. So that's huge. Plus, real-time rents are falling. They've been falling. They're at 3%. Fed and shelter, right? Fed shelter. This is how the Fed measures inflation. It's going to keep falling, guys. I mean, it's going to keep falling. It's a lagging indicator. We're looking backwards here. Inflation's not even the issue anymore. It's really geopolitical risk. It's really, and we're going to get to that. So let me not front run that. So who's set to actually move higher here? What stocks do I think we're going to improve? I'm not going to give you the actual stocks, but I'm going to give you the playbook. Okay. This is a playbook, pure revenue growth. Who can still grow their revenue? Who has demand, right? Where's their demand for the product? Keep that in mind. Put that in your pocket. Who has pricing power, whether they increase prices? Who's going to keep buying it? Chipotle increasing prices. People are still going to Chipotle. I see the line all the time. Who has a strong brand? Apple iPhones. You guys are going to refi your phones, right? Let's refinance our phones. Let's get a new phone. So Apple has a strong brand. I'm not giving individual stocks here. I'm just saying strong brands, pricing power, increased efficiencies. This is the big one. This is where Wall Street's really going to lick their chops. Who can retain margins, right? Who can retain first of all, spending is going to go up anyway. Who can actually increase? Who can shave? We don't need all this labor. We can use AI to increase productivity. We don't need as much overhead. We don't need to pay for all these costs we don't need. Meta made that move. What did Meta do? They said, okay, forget the metaverse. We're going to dump that. We're not going to waste any more money on the metaverse, and we're going to get into earnings efficiencies. We're going to fire a bunch of people, and we're going to make sure that we retain our revenue, stop wasting money, right? That's who's going to go higher. Who has low debt, a lot of cash flow. This one's key for all those fundamental investors who want a strong balance sheet, low debt, high cash flows, right? Or cash flows increasing with low debt. Why? Because for one, they can buy back shares. So they're going to reduce the amount of shares in circulation. That increases price. Everybody's going to chase that. Plus, it makes your EPS go up. Earnings per share, that is what earnings are, goes higher. So your shareholders increases the value for the shareholders when you buy back your own shares. But you can't do that unless you have the cash to actually do it, right? So who can do that? Who's going to do a share buyback? Listen to that on the earnings calls going forward in this earnings season. Also, if you have low debt and high cash, even if your debt's okay, if you have enough cash to pour in the money, this is where I think the real trick's at with the market. Nobody sees this. Okay, nobody's really people are, but most people are not. Debt funding via money market funds. If you're Apple, you got $10 billion of cash. You owe whatever amount of debt. Your debt's locked in at 2.5%, 3%. Now you park that $10 billion into the money market funds. You're collecting 5%. Now you can fund your own debt and create more cash flow. This is the trick I think the Fed is doing. They're increasing rates, and it's actually benefiting anybody who can anybody who's taking in a lot of cash, or who's actually generating a lot of cash. They're going to benefit in this market. So the weak get weaker and the strong get stronger, right? Number three, we're on like 6. Disruptive innovation, right? Who's actually a disruptor here? Why? Because the business models are falling apart. You see Ford, you see GM. I just talked to some workers yesterday in the sauna. They're like, hey, our business is falling apart, right? They can't afford to pay these new wages. They can't afford to do, I'm going to come in and work 4 days a week and get paid more. What? So they're in trouble, right? Ford and GM. Of course, I'm a testable. I'm just saying, in general, whoever's disrupting also has low in debt, also increasing their margin retention, also has pricing power, also has revenue growth. And there's a secular adoption here. Don't just look at a disruptive innovation if nobody's actually adopting it. What is adoption? Well, I'll give you one: crypto. Chainlink is being adopted, maybe not by you because you don't know about it, but central banks are. Swift is using Chainlink. Okay, DTCC, which is the securities settlements for the U.S. government, for the Federal Reserve, the Securities Settlement Corporation for the U.S. literal government, they're using Chainlink. There's a secular adoption here, right? EVs, Teslas, right? Big best-selling car in California. Okay, BYD. Yeah, and I'm just saying EVs in general, secular adoption. So they're going to win in this one, right? They're going to win here. And also, who benefits? And this is the big one. Who benefits from the fiscal policy, right? Inflation Reduction Act, Infrastructure Bill, CHIPS Act. Those are your winners. Why? This is literally just giving a check to these companies, right? If you're part of for instance, Tesla, they're in January, starting in January, there's going to be a 7,500 tax rebate, right? Actually not a tax rebate, it's a literal rebate on the car. It's an incentive from the White House, basically, or Congress, whatever you want to call it. It's an incentive for you to buy an electric vehicle. So you're taking $7,500 off the purchasing price. I mean, how much, what else can you do there? That's big. Infrastructure bill. Well, we saw Caterpillar move higher. You should see more infrastructure, which is going to be what? More construction spending, more multifamily home building, more commercial real estate. Well, commercial real estate's in recession, but more building for infrastructure, maybe roads, bridges, whatever it is. There's going to be more building. That means more construction, more workers. Yes, maybe it's seasonal work, but people will still have jobs. And then you have the CHIPS Act, manufacturing for chips, onshoring, the semiconductor globally, the semiconductor, the chips industry has been globalized. It's everywhere, but now the US is trying to bring it here, so that is more investment in chips manufacturing, more jobs, more jobs, more jobs, right? In goods and manufacturing, where the big ticket items are, not so much in services, right? That's where the big ticket items are set to produce, or set to grow, right? And when I say grow, the industries are going to grow. That means prices come down because you're producing more of them. And so that's going to be interesting, especially going to Santa Claus rally. So, what are the big risks? Obviously, we got to attack the big risks. The Middle East, right? The Middle East conflict expands, specifically between Iran and Syria. And Iran, dude, I didn't even realize how big Iran is. Iran, whatever you want to call it. Iran's a big state. It is a big state or country, however you want to look at it, and they're right next to Syria. The reason this whole thing happened, do your research, was that Syria was going to team up basically with Israel and the US, and and normalize relations with Israel, right? And so what does that do? That threatens Iran. So next, you have an attack. So if this thing continues to expand and goes into Iran, man, do they have nukes? Do they have nuclear weapons, right? Does Russia jump in? What does this do for Lebanon? What does this do for Syria? If the war expands, obviously that's a big risk to the market, because it is more uncertainty. Does China invade Taiwan? Does oil spike above 100? That's the big risk. The big risk, or the big risks that I'm seeing for the market in the meantime. So that's the presentation. Any questions? Any answers here? Um, no questions. Okay, fine. That's totally fine. No traffic today. Throw me your questions. What do you want to see on the technicals? AMD is breaking out. We got AMD breaking out. Let's switch this up. Um, Also, do you have any disagreements? I want to see that. If you guys got any disagreements, Tesla. You want to see Tesla? All right, cool. Look at Tesla. Tesla wedging. Ooh, I'm gonna have to turn this way. Okay. So let's look at Tesla is gonna be tricky here. It is in a nice little wedge. Okay, I like the wedge on Tesla. Let's go to this chart actually. Will those yields peak out? I think we're near peak yields. Oh, plus I didn't even say, look, if inflation eases, the Fed is gonna pause here. Not if it eases, it is easing, but I think the Fed also pauses here. So and earnings are increasing at the same time. Here's Tesla. Big wedge pattern for Tesla. Which one's smaller? There we go. So you got a big wedge pattern for Tesla. It's just wedging. This is very constructive. Now, what are the possibilities going into earnings on Wednesday, I believe? Well, I believe that the bull case is, yes, earnings are going to be lower than they were in the last quarter, but everybody's looking at guidance. Have margins bottomed yet? All these price cuts, are they going to convert into new demand? When does the Cybertruck come out? Has anybody licensed full self-driving? How close are we to full self-driving? Right? That's what this wedge is telling us is, where do we stand? If it does break to the outside, it's going over 100. It's going over 300. That's going to be a big move for a Tesla. If it breaks down, it's more likely to retest 200, 217, 215, somewhere in this range, right? And I think when it does break down, it's going to move right back up, because you do have the 700, the $7,500 tax credit coming online. You have the tax credit that's going to create more demand. Prices are falling. Everybody sees it. Also, Elon is now getting into. There's a new piece that came out. Tesla cuts prices, can see billion, blah blah blah. Elon Musk finally going to spend on ads. So we're trying to get those soccer moms to buy Teslas, right? That's the goal. Get the soccer moms to buy Teslas. So they're going to unleash more advertising. We already have a record of Google searches for the Teslas to the website. So that's what's increasing there. But yeah, Tesla looks great. I mean, there's not much to say. We've been going over this. If you look at the daily chart, you can see that the RSI is pulling back down? Does it go to the lows? It's all about earnings at this point. We're so close to earnings. The question is, what are analysts looking for? Right? What are they looking for? Are they going to guide higher? As in, are we going to still hit 1.5 million? I believe it's 1.5 million cars. I could be wrong. Let's take a look at it. And look, if you guys are on Twitter, one of the big Tesla bulls, if you're looking for Tesla, one of the big Tesla bulls, his name is damn, am I really forgetting his name? He's a big Tesla bull, always comes out with new information. Gary Black. Gary Black. Yeah, check him out. Gary Black. And I'll look at what he's saying here while we keep the charts up. So Gary Black, he's been in since 2021. Um, and what he's saying, he's not bearish on the stock, but he's bearish on EPS. And he thinks Tesla needs to start advertising. The argument here is should Tesla spend on ads or should they buy back their own shares? And a lot of Tesla people get pissed off on it, but because they don't want to see buybacks, they want to see more innovation. And then other people are like, well, no, maybe we should get buybacks so that we could squeeze the stock higher because there's a lot of shorts there. You're buying up all their positions and you're going to squeeze them because they're going to have to cover. Um, but yeah. So Tesla EPS is due to be lower. But hey, this was Q3. Q4 is always the strongest. So going into Q4, I mean, if you have I mean, that's gonna rip. That's gonna rip much higher if you're going into Q4. And there's typically more. It's all seasonality. Again, we can wrap everything up into seasonality. So Tesla's is looking good. Also, what is this? Giga Berlin, Texas, Shanghai, California. There's a lot of data on Tesla, a lot of arguments, but my view is it either breaks out or it breaks down and then goes higher. There's nothing that's going to move this, that's going to change the secular trend of EV adoption. They produce the best EVs. Also, you want to see the production costs, are those still falling? I also think the next best play is going to be AMD, right? AMD has been let's see, where's that RSI? RSI is down there. AMD has been consolidating for a while. What is it, since June, right? It peaked out in about June, never had the upside in July, and now it's starting to move higher. It's breaking out of this flag pattern, it's very bullish flag pattern, which kind of connects, you could say it connects the uptrend and right off the previous resistance level where you have a lot of support here. I would like to see the retest of maybe 102. That might be key. It could bounce from here going in earnings, but AMD is going to be great because it's a chip name. Doesn't depend on consumer spending if it does fall off in Q1, Q2, which that's what I'm thinking is consumer spending is really going to fall off. So that's what you got with AMD. And then price action is just it's been pretty slow. Nvidia, if SMH goes higher, which is the actual ETF, it looks like it should be pulling back into the trend just like Nasdaq. Then you might get more weakness. But once this breaks out, once you get Nvidia, not Nvidia, once you get the Qs breakout, I'll just be watching the Qs in earnings season. Here's kind of the makeup here, right? You're hitting the top of the trend, the bottom of the trend could be next, and then you break out. But we are heading into earnings season, and I think that this is going to be the key determinant. We get a sell off into earnings, and once you clear all the earnings, if earnings are set to be higher, which they are, then we should be running up, right? Consumers are still spending. Historically, October is the end of the bear market. So what do we got? 2 more weeks? Yeah, we got 2 more weeks. I'm bullish on Amazon also. Very bullish on Amazon. Maybe you want to see the retest of 125. Yeah, the retest of 125 on Amazon. What else do we got here? And Amazon's a late bloomer too. Double top. Amazon's a late bloomer, so definitely should be higher. Google's just trending up to get a shot to all-time highs now that YouTube is surpassing Netflix for teenagers, teenager video watch or watch time, whatever that is. So YouTube is increasing the content economy is still booming. So you got Google, and then you have obviously Apple is in this big wedge pattern. or flag in a flag pattern. And yeah, we got to watch out for the earnings. I believe so. You have Tesla, you have Netflix this week. Those are the big, mega cap reporters. Other than that, Apple's the last straw. So I think Apple comes in maybe the second. I think what the last week of October, along with PCE. That's going to be big because you're getting the Fed's preferred inflation gauge. Okay, are they going to pause? That's the real question. And then you get Apple earnings if they're better than expected, or the earnings cycle is starting to turn positive. Plus, the Fed pauses here. We're gonna have a violent rip to the upside. I think that's what we're seeing here. The VIX is still not getting above 21 and holding, or above 20 and holding. It's spiking at 20 and then coming back down. So volatility or insurance against the S&P 500 isn't, holding up here. The war will probably get this up, but that has to expand. This weekend also is going to be huge because Israel's nobody's going to stop Israel. So we should find out by Sunday, right? By Sunday night, whether Iran's going to get involved, whether it does spread. If not, the market's going to rally. The market's going to rally. Bond volatility has been elevated the past couple of weeks, and you don't want that to continue to elevate because it does hurt liquidity conditions. So keep our eye on bond volatility. What else is there to look at? Oh, the other macro force is copper. Listen, inflation is done. Look at commodities. Copper is the cost of infrastructure that is falling. Nat gas, it had a big move to the upside, came back down. It probably trends up going into the winter months, probably peaks in February. But nat gas, gold had that big spike. Ooh, and this is interesting. This is scaring a lot of people. Gold spike. What spikes gold? Well, geopolitical risk. The positive here is if gold is spiking and there's a risk off event, you could get a flight to safety into U.S. Treasuries, which is going to bring down yields. But the negative here is that the dollar also would be the dollar also might go higher. If the dollar goes higher, it's going to be a headwind for stocks, for crypto also. This is a headwind. Any new fear, uncertainty, or doubt, gold rises. Yep. Yeah, gold rises. It's usually gold, dollars, and treasuries. Gold, dollar, U.S. Treasuries. Those are the three risk off. And it depends on the type of risk here. It's not any type. If a bank fails, then treasuries go up, dollar goes down, gold goes up. But if it's geopolitical risk, it's going to be dollar up, gold up. And I wouldn't say treasuries, but treasury, there has been a bit on treasuries from that move. And that's what we're staring in the face here. The geopolitical risks are the only really big risk. Treasury issuance isn't that crazy. It's not going to be the biggest risk, treasury issuance, which is going to push rates higher because most of the issuance is on the short end of the curve. And those are getting bought up. That's not really a threat, right? We'll go to 2-year. If you look at the charts here, 2-year, 3-year, it's not moving up. They're stuck because shadow QE is eating these up, which is due to run out in 2024 in about the summertime. Yeah, 5-year, 10-year. And this is a lot of bearish comfort. This is very bearish too, like in the short term. Maybe it spikes later, but it looks like yields are done going up for now. Maybe they come back to like 4.4. And if the Fed does pause in November, it's going to be game over for yields. They should be coming down pretty dramatically, right? You should have a pretty dramatic drop, and this would lift this would also lift stocks up, valuations of stock. Yen and Swiss too. Gold will continue to climb until there's a solution to Israel and Hamas attackers. Yeah, it's probably true. 100%. Any other comments here? What are your guys' questions about the Santa Claus rally? Right. Well, convince me that there's not other than the obviously, other than the attacks. Shoot, if you get geopolitical risk, you're in trouble. But, just using common sense here, people are going to spend. It's holiday season. Okay. We just found out that the government revised everybody. You hear the narrative right now. The bear narrative right now is what? Consumer savings are going to deplete to zero. Well, that narrative was debunked because, they revised it up to a trillion. They revised it at $1 trillion higher, meaning there's still $1 trillion of savings for US consumers. And guess what? They're going to spend that money on Black Friday, Black Monday, Black anything. No, I'm just kidding. They're going to spend that money, right? For the holiday season, whether it's travel, whether it's gifts, whether it's services. And that's going to fuel into what? Consumer discretionary stocks. It's going to fuel, policy. Maybe yields climb up again, but historically, stocks can still rise, and it's only the premium stocks with higher yields. Not all stocks, right? I'm bearish on commercial real estate. I'm bearish on banks, mostly the regional banks. I'm bearish on retailers like Target, maybe like Abercrombie and Fitch, or whoever wants to spend and buy new pants or shirts, skinny jeans. I don't know. Maybe that those go higher. I don't know, but it's probably probably a lot of the Amazon goes higher. Amazon's going to really benefit from this. I think Amazon has a really big move to the upside. Advertising going into an election year. That's the other part. December is the strongest year or the strongest month going into an election year, right? That's always the strongest month. So I see the year end rally here starting to materialize, and we'll see how earnings are. So far, the big banks are reporting positive earnings, beating top and bottom line. I saw the Ukraine and Russia war spike gold to so high until Biden declared sanctions. Oh, okay, yeah. Yeah, that's pretty much it, Billy. That's pretty much it. So, yeah, that's it. And then looking at crypto, there was the rumor yesterday that crypto would or what was it, that the SEC would make their decision sooner than later. It was supposed to be midnight. Man, I don't believe none of that stuff. That's just trying to get people to buy in really quick, even though I still think it's going higher. But we'll see how that actually plays out. Supposedly, Gary Gensler is supposed to now focus regulation on AI instead of crypto and blockchain, or he just gave enough time for BlackRock to buy more Bitcoin, so they can buy it at a lower price. BlackRock, Grayscale, whoever it is. That's my view. That's what I'm thinking happens here. Let's see. Do we have any breaking market news? Okay. Iran's mission to UN. If Israel's war crimes and genocide are not halted immediately, the situation could ricochet far-reaching consequences. So we have Israel. We have, who's this? The Iranian, speaker for the, I don't know who it is, speaker for Iran. The speaker from Iran is basically saying if the war crimes and genocide are not halted immediately, the situation could ricochet. So they're making threats. That's not good. That's going to cause a lot of market volatility. Gold probably goes higher. Syrian's airport out of service after Israel airstrike. Uh-oh. This is from Syria. ABC News citing U.S. officials. The U.S. is sending second aircraft carrier to the eastern. Dude, this is either going to escalate or it's going to resolve itself. It feels like it's going to escalate. If you want to keep it real here, it looks like it's going to keep escalating. Not good for the market. Not good for the market's uncertainty. So it's a lot about statements here. The next stage of war includes significant ground operations. I mean, we kind of know that. Yeah, uncertainty. That's kind of what's going to bother the. But this also gets the. What does this do? This gets the Fed to pause. This is going to get the Fed to pause, and it's likely to increase the production of oil, and it's likely to increase more manufacturing for weapons, missiles, right? The economy stays strong. It's likely to get rates or bonds, bonds to bid higher, meaning rates come down. So you might get a spike, and then that's it. That's the bottom. You might get a spike in the VIX of uncertainty, and then that's it. You said first 25, then 22K, then we go up. I could see that, Mike. 22, 25K, 22K, and then go up. ETF approval, Bitcoin halving. Yeah, I can see that. You have a new terminal from Reuters or Bloomberg? Do you have a news terminal? No, I'm just looking at Twitter. I'm not looking at Bloomberg or Reuters. I mean, I would if I needed like immediate news, but I don't really need Twitter. Usually they just repeat whatever was on Bloomberg terminal. And at this point, it takes time to digest the news. I don't think it's immediate. I mean, I'll get a Bloomberg in the future. Let's see what Bloomberg is saying. Too expensive. I'm not going to pay for a Bloomberg terminal when I get the same news. They just retweet it on Twitter, same stuff. So why get it? Why pay for it when you can get it for free? Unless you're like a news outlet, but we're doing stock market. Israeli latest Biden, blah blah blah, Gaza invasion news, and then we'll see how what China does. Right? Does China? I don't think China is going to make a bid for. I don't think China is going to go take Taiwan anytime soon. But we want to see what China actually thinks. We want to see how that plays out. Uh, shoot, I think that's it. Do we have any market questions here going into next week? Any market questions? If not, we're gonna sign out and we're gonna stay up to date. If there's anything new coming on, China, Taiwan are definitely a risky potential. Yeah, I don't think it's that likely because China's economy is pretty weak. It could happen, but they're pretty weak, and I don't think they're going to make that move. It caused too much chaos. Their birth rates are dropping. I think I read their China's birth rates are dropping at the fastest rate, like 10% year over year, something like that. That's insane. Gold futures are. See, gold futures. Is Bitcoin going to become a risk on? Yeah, we could get a quick flash here. Another scenario is there's a big flash to the downside, a risk off flash. But I think it gets bought up unless there's real action. If you get soft politics or soft, what do they call it? Soft war. I don't know what they call it. Hard and soft. I can't remember what it is. If they actually do something, if Iran actually does something, that's going to be negative. But if they're just talking, then I think it's going to maybe it could cause a quick rip in the S&P to the downside, stocks in general. VIX goes up and then it recovers. But if they actually do something, that's where there's going to be an issue here. So, I mean, hey, maybe you stay risk off and you just wait. Depends what your position is, what you're looking at. So, a lot of stuff to consider here, or nothing happens, or it dies down. It dies down. I'm sure there's a lot of negotiations happening at the moment. There's probably a lot of negotiations at the moment that we are not hearing about behind the scenes. And so, we'll see how those negotiations actually turn out. We'll see what China says, Russia says. So yeah, keep up to date. All right. Well, I'm out of here. I'm gonna go hit the gym. As a matter of fact, if you guys are on TikTok, we're gonna do the I'm gonna do the fitness live stream also in about 20 minutes before I hit the gym, get my gym routine. And if you guys have fitness questions, my buddy is Aaron. He had to get called into work because he is fighting across seas. No, I'm just playing. But he is in the, what do you call it? The urgent response. He's in the response business, so he's a first responder. So anyways, yeah, we're going to be doing that fitness live. If you guys want to jump in about 10, 15, 20 minutes, I'll answer all your fitness questions. If you have fitness questions, how to get big arms, how to get a six pack, how should you lift, whatever your questions are, jump on there and I'll be ready to answer that. But yeah, anyways, you guys stay blessed. I'll catch you tomorrow. If there's anything urgent, we'll jump on and we'll talk about it. If anything changes the market, other than that, we'll catch you later. Don't forget about the newsletter. We got the newsletter that came out. If you want to just, brush over the information that we talked about today, newsletter in the link in the bio. All right, guys, we'll catch you later. Peace out.